Hey everyone, as we end 2023 and begin a new year, I wanted to bring you 3 spectacular dividend stocks you can buy in January to start off the new year right with some dividend stocks in your portfolio. Now, I'll show you these dividend stocks, their valuation, their profitability, and the dividend yield, and talk a little bit about why I like each of these 3 dividend stocks for the new year. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first stock I'm going to recommend for January is Starbucks. Starbucks, the coffee giant that you see on nearly every corner, is trading at a forward price to earnings of 19.73. And you can look back at this chart of its forward price to earnings ratio. The stock has rarely been this cheap, going all the way back to 2020. And in late 2019, you have not been able to buy Starbucks stock this cheap. The valuation has fallen, notably because of slower international growth. Geographies internationally was expected to grow much faster in 2023. That didn't come to fruition. But in 2024, that could be much better. But even if it's not, you're getting Starbucks stock at a cheaper valuation. Moving on to its operating profitability, Starbucks has maintained a double-digit operating profit margin, save for the brief moments in the pandemic when it had to shut down many of its locations, at 15.3%. Starbucks' profit expansion strategy includes expanding internationally, where locations are less expensive to operate and more profitable. And so, as it grows more locations internationally, it should expand the profitability of the business overall because the proportion of locations international compared to domestic will increase, and those locations I mentioned already are more profitable. The rent isn't expensive, the rent isn't as expensive, and the labor isn't as expensive. And so overall each location is more profitable. That's a strategy that has been working well for Starbucks, and I suspect will continue to work well in 2024 and beyond. Finally, Starbucks offers passive income investors a dividend yield of 2.27%. And while that dividend yield is less than what you can get with the 10-year government bond at close to 4%, I would prefer Starbucks stock because over the next 5, 10, 20 years, Starbucks is likely to increase this dividend per share in that time. Starbucks is a profitable operation. You can see here 15.3% profit margin, and it's growing the number of locations, increasing revenue. And so as it grows, that profit will expand, and that will lead to more cash flow and a greater dividend per share. Investors should note that people are still preferring to spend more time and money away from home, and I suspect that trend too will continue at least through the first half, probably in the first 9 months of 2024. People will continue to favor spending money and time away from home instead of staying at home because we were cooped up at home for so long. There's so much to make up for, so much lost time getting out and unleashing that pent up demand. The next dividend stock I'm going to recommend is Coca-Cola. Coca-Cola is trading at a forward price to earnings of 20.95, and that too is on the cheaper end of its valuation, going all the way back to 2020, save for, of course, that brief moment during the pandemic when there was the panic. Besides that, the stock has been more expensive. Coca-Cola has demonstrated its pricing power, increasing prices by several rounds. And in the latest quarter, Coca-Cola increased prices by double digits in some regions, and it only saw unit purchase decrease by 1%. Imagine that. You increase prices by 15%, and people only decrease purchases by 1%. That's strong pricing power, some of the strongest pricing power I've seen. Already, Coca-Cola had a profitable business, a 28.45% operating profit margin that was on its way up. While all of these price increases work their way through the system, I wouldn't be surprised if Coca-Cola's profitability, operating profit margin, approaches 30% in 2024. Coca-Cola also benefits from that same trend I talked about with Starbucks, with consumers unleashing pent-up demand to get out of the house. Coca-Cola has the strongest market share among any beverage brand in away from home channels. Think about the last time you went to a restaurant. What did they have there? Was it Coca-Cola or was it Pepsi? Coca-Cola has cultivated exclusive relationships with merchants worldwide to make Coca-Cola the exclusive beverage at every location. Think about its relationship with McDonald's. You're not going to find you're not going to find Pepsi at McDonald's, you're going to find Coca-Cola. That's a lucrative relationship. Coca-Cola has dozens, hundreds of relationships like that one, maybe not as powerful as McDonald's because, McDonald's is such a vast restaurant business, but you can imagine all of the restaurants that Coca-Cola has made exclusive relationships with, and people are going out more, and Coca-Cola is benefiting from that as people consume more Coca-Cola away from home. Coca-Cola offers a dividend yield of 3.13%, a solid dividend yield, but there's better dividend yields out there. The benefit with Coca-Cola is investors can feel confident owning Coca-Cola for the next 3 or 4 decades. Coca-Cola's been around for more than a century. I think it'll be around for a long time more. People love Coca-Cola. They've grown up with it. They love the taste. Coca-Cola has relationships with consumers. Consumers habitually drink Coca-Cola. It's going to be difficult to separate consumers from Coca-Cola. And that security, that brand loyalty, that pricing power are some of the things that I find most attractive with Coca-Cola stock and why I'm recommending it for January of 2024. And finally, the last stock I'll recommend in this trio of 3 dividend stocks to buy in January is Visa, trading at a forward price to earnings of 23. Also, on the cheaper end, you've been able to buy this stock for going back all the way to late 2020. And Visa is the most profitable business you will see anywhere. Well, at least anywhere in the stocks that I follow. I do not follow any stock that has a better operating profit margin, 67.15%, than Visa. It's incredible, this profit margin. There's few companies that even come close. And this ability to generate this type of strong profit margin with over 4 billion Visa cards in consumer wallets, and the fact that Visa and inflation are positively correlated. As inflation increases, Visa's revenue and profitability increase, all bodes well for Visa heading into 2024. Additionally, Visa benefits from international travel and travel overall. As people travel more often, they use their debit and Visa cards more so to make transactions. They're not taking cash with them, right? If you're going from the US to China or from the US to France, you're probably not taking US dollars with you, right? Because you probably can't use US dollars in France, but you are taking your Visa cards and you are taking your Visa debit cards, and that makes it more likely that you will use that at least to go to your bank and maybe conduct some transactions, exchange some funds, and so on, etc. Visa does benefit from travel spending, to be sure. And finally, Visa's dividend yield of 0.72%, again, is not very high, but the prospects of Visa increasing this dividend is very good. You look at the profitability, 67%, and the fact that Visa doesn't need to invest in physical infrastructure, right? It's mainly investing in the technology, the digital infrastructure, the back end of the business to make sure that those transactions are facilitated properly, security, things like that, not in physical infrastructure. It doesn't need that much of its cash flow to put back into the business. And so this is cash flow that Visa can return as dividends to shareholders. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.